blow apart the stock market and put it back together so that it makes sense for you. I'm Forbes Markets Editor John Dobis. Well, the S&P 500 index, stocks overall in the United States, Dow Jones Industrial Average, moving on up like George and Wheezy, or flying high again, or perhaps you're more into the fifth dimension, up and away in your beautiful balloon. Yes, stocks are indeed rising. The S&P 500 index, one-year chart right here, looking at 10-day average, riding high on a short-term wave of momentum, actually going back to around Christmas time. This latest leg of the bull market launched with stocks like Apple and others blazing higher. Look at what has been working so far. Here are the 10 sectors in the S&P 500 index. Here's the SPY, up 12% year to date. Not bad for a quarter right there. Technology, though, up 19% over here. You've got the bad boys, the financials, up 21%. The winners from last fall when everything was falling apart, utility stocks and the XLU, they were down 2.2% for the quarter. Healthcare, energy, we'll talk about energy in a moment. But what was the big driving force? Bank stocks, stuff like Citigroup, Bank of America, rising from the dead pretty much, getting some serious gains in there. Apple, of course, was levitating throughout the quarter. Energy, up only about 3% for the quarter. And they kind of lagged the S&P. Why? Well, worries about global growth. After all, we just came off the European debt crisis. We've got things going on in Iberian Peninsula, and there's the possibility maybe that economic growth could be retarded by some geopolitical developments. All that aside, here we go. XLE fallen down to its 200-day average, rebounding slightly off of that, but you've got some weakness in the XLE, the ETF that tracks the energy sector. But it may have some support in the coming months. Why? Because crosshairs could be trained on Iran. You've got American forces, aircraft carriers in the waters off of Iran. You've got Israel now with clearance in Azerbaijan to use those airfields there for various purposes that are undisclosed. If you're smart and you read Agostino Fontevecchia, and I'm sure you are, you knew all about that. Don't blame Obama for high oil prices, or why there's 3 aircraft carriers headed for Iran. Indeed, the world is a stew of very malevolent juices at this point. Is that a peace sign or a victory sign? Mahmoud Ahmadinejad, of course, he's spoken about erasing Israel from the face of the earth, and that really, if you're the leader of Israel, might prompt you to do something, especially if you think that country is developing nuclear weapons. So we've got a powder keg possibly ready to erupt in Iran. We don't know when exactly. Up to this point, Israel has dealt with it, and the U.S. perhaps too, with remember the Stuxnet, the worm that crept into the reactors and other stuff, sabotage, assassinations. So it's kept outright war from happening, but you've got 2 states that seem to really hate each other in a very barbaric kind of way, looking to go to war. I hate to say this, but how do you make some money off of that situation? Well, if you think something's going to happen in Iran and choke off oil supply by June, you might want to take a look at buying some options on the XLE, the ETF we were just looking at that represents the energy sector. Right now it's at about $71. So here's out of the money, here's in the money calls in June. So $250 will get you the right to buy the XLE at $72 or higher. That's the early June calls. You have June 12th, I think, and June 20-something. You have 2 weeklies in there. In any case, you can buy options, and you need to clear it through your broker to do that, but it's not hard. Understand the risks. You would lose all that premium that you put into it, of course, if by that time it traded below $72. Remember this scene? We've got the president and the president of Russia together, Mr. Medvedev. This is my last election. I'll have more flexibility afterwards. So if you think that the strike, which would cause gas prices to go back up to those kinds of prices, an arm and a leg, you know President Obama doesn't want that to happen. So maybe it would happen later. So give yourself until January 18th, 2013, 2.5 months after the November election. So at this point, they don't have $72 calls right now on that. They have a $75. That'll run you $4. That's twice the price of the June, which had a lower strike price by $3. May sound like a lot of complex stuff, but check out, in Yahoo Finance, all those places. Click on the options section, play around with it. You don't have to do it with the XLE, but maybe some, here's real action, firecrackers, DIG. It's the Ultra Exploration and Production Index, and it moves very fast in the opposite direction, very fast with the E&P companies, and it's been going down lately. So it's a leveraged ETF. They do sell options on it. I wouldn't dabble necessarily. Or you could look at a company like Rig. Rig, of course, was part of the Gulf oil spill. Recently got exonerated to some degree from paying some restitution, and resting at the 50 and the 200-day average. And look at the 50 coming up through the 200-day. Not a bad-looking technical sign in Rig. You can play around with the options, or you can buy the stock. They stopped paying their dividend, which is kind of a bummer. In any case, looks like war may be an inevitability. Nobody really wants it, at least I don't, but it looks like we're heading that direction. So if we do have it, protect yourself.